Mr. Chairman, I thank you for coming, and I want to talk. I want to turn our attention to the European situation. The European situation, to quote your testimony, is, quote, leading to substantial increases in sovereign borrowing costs, concerns about the health of European banks, and associated reductions in confidence and the availability of credit in the euro area. Resolving these problems will require concerted action on the part of European authorities. My first question is, do you believe that loans to European countries today carry a greater risk than they did 2 or 3 years ago?
When you say to countries, do you mean to the governments?
Yes.
Surely they do, and you can see it in the interest rates that they have to pay.
And would you please explain what the exposure of the United States, the American taxpayer, is to that credit challenge that they have?
Well, in the official sector, the United States is a 15% shareholder of the IMF. The IMF is involved in programs for the 3 small countries that Greece, Portugal, and Ireland. The IMF does have a very good record of being paid back. They have a senior position in the debt of those countries, and they are very much engaged in making sure that those countries are taking appropriate policies. As I've explained in previous venues, the Federal Reserve has a swap line with the European Central Bank. That is not an obligation of any European government directly. The European Central Bank is highly creditworthy. It is owned by the central banks of all the countries in the Eurozone. And moreover, they give us euros as collateral, so it's a swap of currency rather than a loan per se. They lend the proceeds onto their banking system in dollars, and there's some important reasons for that. But just from an exposure point of view, they take all the credit risk, all the interest rate risk, and all the exchange rate risk, and I think it's a good bargain for us.
Are you able to quantify the exposure of the U.S. taxpayer to the risk through the IMF and elsewhere?
Through the IMF? I don't have the number exactly, but it would be in the tens of billions.
It may even be higher than that, I think. Do you believe that it's appropriate for the United States, for the Fed, and hence the United States taxpayer, to have a greater exposure through the IMF, or are we at about where we ought to be? Or should we decrease our exposure?
Well, I think the IMF plays a really important role in helping to stabilize countries that are in stress. The administration, the Treasury Secretary is our director, and he has the most direct responsibility for the IMF, and he's been very clear that he's not supportive of any increase in the U.S. contribution to the IMF, and so I would leave that to his judgment. His view is, as I understand it, you should speak to him, of course, his view is that it's up to the Europeans first to take the necessary actions to stabilize the situation.
Let me switch very quickly in the brief moments that I have left to the comments that you made about health care and Medicare, Medicaid. Our discretionary budget is about $1 trillion. The amount of the deficit is greater than $1 trillion. So one could do away with all discretionary spending, isn't it correct? You could do away with all discretionary spending and not even get to a balanced budget without addressing Medicare, Medicaid, Social Security, and
well, part of the $1 trillion deficit is due to the fact that the economy is in very weak condition, and the CBO suggested that if the economy returns to normal, say by 2017, that the deficit would be more in the order of 4 to 5%, which would be on the order of, in today's terms, 60 to 75 billion. So that's not, the balance is not quite what you said, but what I said before is true, that discretionary spending cannot bear the entire brunt of deficit closing. It's just not arithmetically possible.
Thank you, Mr. Chairman.